Myself, Dr. Rabinarayan Samantara. Since you have already listened to my first lecture, we shall go over to the next one or the second one, which deals with the rates of income tax, then the concept of alternative tax regime and so on. As far as income tax rates are concerned, all individual assessees have been classified into three broad categories. First one is for those individuals who have already attained the age of 80 years or more, and those who are also known as super senior citizens. For them, a income level up to rupees 5 lakh will be treated as fully exempted from tax. Then between rupees 5 lakh and 10 lakh, the rate of tax will be 20%. Then above income level of rupees 10 lakh, the relevant rate of income tax would be taken as 30%. Now, as for the second category of individuals, this category actually includes those individuals who are treated as senior citizens or who have already attained the age of 60 years or more. For them, initial income up to the level of rupees 3 lakh will be treated as exempted from tax. Then between rupees 3 lakh and 5 lakh, the rate of tax will be taken as 20%. And finally, for income exceeding rupees 10 lakh, the rate of tax will be taken as equal to 30%. So let me repeat these rates once again for the sake of better understanding. As far as senior citizens are concerned, the income level up to rupees 3 lakh will be treated as fully exempted from tax. Then between rupees 3 lakh and 5 lakh, the rate of tax will be taken as 5%. Then between rupees 5 lakh and 10 lakh, the rate of tax will be taken as 20%. And finally, for income level exceeding the limit of rupees 10 lakh, the relevant rate of income tax will be taken as 30%. Now, as far as other individual assessees who are treated as general assessees, general individual assessees, or ordinary individual assessees, in the case of all such general individual assessees, income level up to rupees 2 lakh and 50,000 will be treated as fully exempted from tax. Then between rupees 2 lakh 50,000 and rupees 5 lakh, the rate of tax to be applied should be taken as equal to 5%. Then between rupees 5 lakh and 10 lakh, the relevant rate is actually 20%. Then for income level exceeding rupees 10 lakh, the rate is to be taken as equal to 30%. So here we can say that all income tax rates are generally almost equal in the case of different categories of individual assessees, but there is some difference with respect to the initial amount of exempted income. It is actually rupees 5 lakh in the case of a super senior citizen. Then it is rupees 3 lakh in the case of a senior citizen. Then it is rupees 2 lakh 50,000 in the case of ordinary individual citizens who are actually below 60 years or who have not reached the age of 60 years or so far. Now, during the last few years, a system of taxation known as alternative tax regime has been introduced by the government of India. Here, under the alternative tax regime, lower rates of income tax have been offered to the assessee, but at the same time, the assessee is actually deprived of certain important exemptions or deductions. Here, up to income level of rupees 2 lakh and 50,000, it is actually nil, or the rate of tax should be taken as nil. Then between rupees 2 lakh 50,000 and 5 lakh, the relevant rate is 5%. Then between rupees 5 lakh and 7 lakh 50,000, the rate is 10%. Then between 7 lakh 50,000 and 10 lakh, then 10 lakh to 12 lakh and 50,000, then 12 lakh 50,000 to 15 lakh, then above rupees 15 lakhs, the relevant rate should be taken as 15%, 20%, 25% and 30% respectively. So here there are so many different rates of income tax which are applicable under the alternative tax regime. Here the rates of income tax are actually somewhat lower than those which are prevailing at present under the old taxation system, you see. But here those individual assessees who actually decide to opt for the alternative tax regime or the alternative system system of taxation, they will be deprived of claiming so many different exemptions or deductions. For example, standard deduction cannot be claimed by the assessee who has opted for the alternative tax regime. Similarly, deduction under section 24 cannot be claimed from him. Then there are so many other different deductions or exemptions which will not be granted to the individual assessee concerned who has opted for the alternative tax regime. Therefore, each individual assessee has to make a comparative analysis of the actual amount of tax liability arising under the both the systems of taxation, the existing system of taxation or the old system of taxation, and the new system of taxation known as the alternative regime, tax regime. Here, under both the schemes of taxation, the amount of tax liability has to be calculated by the individual assessee with reference to a particular previous year in which various kinds of incomes have been earned by him, and naturally it would be beneficial for the assessee to opt for that scheme of taxation which actually results in reduced or lower amount of income tax liability. Now, for a partnership firm, the incomes are generally taxable at the rate of 30%. Then for a domestic company, the rate of tax is generally 40%. Because in the case of all these different entities, a flat rate of income tax is applicable. Now, after having calculated the amount of tax then we are supposed to add the amount of surcharge also. As far as an individual assessee is concerned, for income level between 0 and rupees 50 lakh, the amount of surcharge will be taken as nil. Then between rupees 50 lakh and rupees 1 crore of income, then between rupees 1 crore and 2 crore of income, then between rupees 2 crore and 5 crore of income, and then above rupees 5 crore of income, the relevant rates of surcharge will be taken as equal to 10%, 15%, 25%, and 37% respectively. This amount of surcharge is actually being added in addition to the normal amount of tax which is calculated or which is payable by the company. Now, after adding the amount of surcharge, then we are supposed to add what is known as health and education cess. Health and education cess is always added at the rate of 4% in the case of all kinds of assessees, irrespective of their level of taxable income. That means health and education cess is to be added in all possible circumstances, and finally the amount that is arrived at or calculated, that would be known as the actual or the net tax liability of the assessee. So these are some of the important points which we have already discussed. You see how the amount of taxable income of an assessee is to be calculated, then how the tax liability of an assessee is to be calculated. Then we went on to discuss the rates of income tax which are prevailing at present under both the systems of taxation, including the existing one and also the alternative tax regime. Then we discussed how the amount of surcharge is to be added, and finally how the amount of health and education cess is to be added. So I hope we have been able to do some minimum justice to the subject, you see, because this bare understanding of the income tax provisions will prove to be extremely beneficial for each and every assessee. This is all from my side today. Thanks to all of you.